Hi, everybody. Welcome to our monthly FX Street webinars. Today's subject is how I find day trades in the currency market. My name is Boris Schlossberg. I'm the founder of bkforex.com. As always, past performance not indicative of future results. Trading Forex carries a very high level of risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Everything I tell you here is for informational purposes only and should not be relied upon as investment advice. And if you have any questions, of course, feel free to ask me as you go along. But understand that everything here is just for demonstration purposes only, and take it accordingly. Okay, let me see if I can start my charts because we're going to go full screen. I'm going to run through the charts first. Then I'm going to share with you a very interesting strategy in process, something that we're working on. This is by no means the final day trading strategy, but it's an interesting day trading idea that I want to share with you today. That is something that we work on at BK Forex in our daily webinars. It's part of our laboratory experiment. So again, I want to stress this is very experimental, but it's something that's very cool that I think you guys might enjoy on a day trading basis. And then I'll take questions, whatever you guys want to do. Whatever you guys want to do. Okay, so first, let's just run through the charts, see where everything stands on a sort of a trading basis. Let's just go look at dailies for a second. And we see the euro still remains basically compressed between this 33, 34, 34.50 range, and very, very contained within this levels. As you can see, this is, the euro basically is a breakout above 34.50, breakdown below 3,300. And for the last basically 2 weeks, we've been doing nothing but just kind of holding this range. And the reason why we've been holding this range is because I think there's a tremendous amount of uncertainty in the marketplace regarding U.S. monetary policy, regarding German elections, and of course, the single biggest uncertainty right now is regarding what happens to Syria. So you have this back and forth, flow, especially the last week of August when everybody is gone and everybody is essentially on vacation. Lots of, very little liquidity in the marketplace. Plus you have end of month lows. And you have all sorts of other things that I think are really containing and compressing price action. And if you're a range-based trader, this has been a range-based trader's dream. You just basically sell 34s, buy 33s, sell 34s, buy 33s. If you're a breakout trader, the only thing you should do is sit on your hands. It's been very brutal to try to trade any of these. Every breakout has been a fake out right now. And generally, one of the interesting things about technical analysis and generally one of the interesting things about price action that we do have some degree of confidence on is, direction is very, very difficult to predict, right? Direction is almost random in many ways. It's almost impossible to predict direction. But we do know statistically, that volatility tends to be mean reverting, right? So generally what that means is that if we're going to be in a very compressed volatility environment for a while, that's going to be followed by a big volatility environment soon. Now, of course, it's just a statistical quirk. It's not by no means a guarantee. We could be in this very compressed volatility environment for a long time, and fake outs could be breakouts for a long time. But just statistically speaking, this could give us a little bit of a degree of confidence that if we do get a break of the 34.50s, then it's reasonable for us to assume that 35, 36 may be in view. If the 33s break down, then certainly we have 32s in view, and then of course a much deeper support all the way down to 30. That would be a complete crash to the euro and dollar strengthening. So my point being is that at this point, if you're a breakout trader, wait, because the odds favor some sort of a breakout eventually. But of course, there's no guarantee, and of course, past performance not indicative of future results, and of course, this can remain very stationary and just frustrate a lot of breakout traders for a long time. So that's kind of like where the euro stands. Yen is, even though it's having a good day today, right? Even though yen is having a good day today, is still on a longer-term basis just really ugly and bearish. Because if you look at this trend line, what do we have here in the yen? We have basically a series of lower highs. And Roy's telling me that he thinks that the MT4 chart looks better. That's great, Roy, but I like to use IntelliCharts. So because they're much more intuitive. So I think you can actually see on the IntelliCharts very clearly that we have a series of lower highs, have not been broken. 98 got basically spanked. To me, in my opinion, it is mildly bullish that we hold 97. And if we can, if we sort of close it at around 98 or close to 98 for the rest of the day, this 97 now becomes a key support level. And you could turn your bias to a more bullish bias using this as a support level, basically because this would have made a higher low, and therefore give you some confidence that maybe a near-term low has been put in place. But in order to get really aggressively bullish, you got to clear this 99 on a closing basis. This 99 really is just a major overhang, and until and unless 99 gets cleared on a closing basis, it's very hard to be anything more than just neutral on the yen for a time being. And of course, if 97 gets broken, we start trading around 96.50s. Then we have really big key support here at 96. And if that gets broken, it's just open game all the way down to 94. So my point is that we may have worked off the bearish bias in the yen for the time being, but by no means do the technicals tell us that this is anything but a dead cat bounce. You got to have 99s clear. That would give us a much more serious conviction that there's more potential to the upside. Basically, yen really sees 99.50, 150 as big resistance levels over here, right? This is the big resistance level. And then if that gets cleared, if we have a much more powerful move, then of course we have a test of the 104s. All of this would necessitate, in my opinion, a really, really bullish U.S. economic scenario. That would suggest unemployment rate continuing to go down, U.S. growth starting to pick up at around 2%, the Fed beginning to taper, bonds going to 3%, all sorts of things that are just difficult to imagine right now. Not impossible by any means, stretch imagination. It certainly could be possible, but certainly very difficult in today's environment to find. So that's the yen story. That's why I'm neutral at best on the yen right now from the technical point of view. Let me clear all the lines. Let's take a look at cable. Cable's, this is kind of a bullish candle today, right? I mean, look at this. This is a serious hammer. For those of you who are not familiar with a hammer is basically where, prices test lows and then end up on the highs. What that would suggest is that, the market's rejected the lows and really brought it up, to the highs of the day. And that's a relatively bullish construct today, in the pound. And that's really triggering off of the fact that the speech by what's his name? I'm sorry, one of my computers is just going off, so I'm getting distracted. Speech by Carney was not nearly as dovish as everybody thought. Basically, he reiterated his whole thing about, he's going to keep interest rates low and so on and so forth. But what was interesting from a hawkish point of view is, number one, he recognized that the UK economic recovery is very broad-based, and that is certainly having a positive impact on growth in the UK. Number two, and this is actually something very uber hawkish, he recognized that as the economic recovery is taking place, UK may be starting another housing bubble. And remember that the central bank is very low, even though the central bank is very dovish and still wants to continue to accommodate, it's also very cognizant of the financial risks of being too accommodative and sparking yet another asset bubble in the UK market. So the fact that he noted that was actually a very bullish pound statement, and I think that's what the market seized on. That's why you have the market completely recover, and that's why it looks very very promising on a technical basis. This kind of a very, very strong a doji candle, which looks like a hammer. Now, by no means does this give you carte blanche to think that there's going to be directional move in that way. But it generally, you have an example here where the lows get bought and it ends up in the highs. That tends to have some continuation. You have an example usually here and here where you have some continuations. You have an example here certainly where you have a modest amount of continuation, big breakout, modest amount of consolidation, and further continuation. So the fact that we have tested the lows twice and we're going to end up, if we're going to end up here by the end of the day, could give you a modest degree of confidence that we could possibly make a run towards the 56s and the 57s. But the 57s, of course, are a very, very key resistance level. So is there upside in cable? There is. Is it modest? Definitely. I think this 57 level operates still very much as a double top. And it's certainly going to take a lot more than just this speech to barrel on through and move us past this 57 level in cable. And last, I kind of want to look at the Aussie, which has just been horrid, right? I mean, it is Aussie has just been a failure at every level. And what's interesting here is that, remember this 88.50 level. The Aussie basically tested a very, very long-term double bottom support at 88.50. And we had a big bounce, and everybody got excited around 91, 92 because we thought, okay, maybe it's gonna sort of consolidate, build up enough of a base to break out above 93s. Well, guess what? It did the exact opposite. It consolidated, and the base didn't break out. The base broke down. So now we basically have a double top at 92s. We broke the 91s, broke 90s, and now we're starting to consolidate over here. The only ray of hope for Aussie bulls from a technical point of view is if we continue to hold basically above 88.50 and start to formulate a higher bottom. There is promise now maybe that there's yet another base building that we could begin to remount and try to move up towards 91, 92. But at every single re-rally, notice what's interesting about Aussie is that at every point, the resistance point goes lower and lower and lower, right? Although the resistance point over here now is going to be like 91. The only sort of another ray of hope is that there's a compression here between resistance points, so it's not that far away. In other words, it's dropping at a smaller and smaller level, right? And so when the currency pair drops at a smaller level, the rate of decline decreases. That is, if not bullish, certainly not bearish, and that creates because momentum is dying out to the downside, and that creates a potential here for a base. So bottom line is, when you're looking at Aussie, all you can hope for right now is some signs of a base and hope that it doesn't break through, because if it does break through at the 88s, then the acceleration could take us all the way down to 85, which is actually where the RBA really wants to see the currency pair, because they want to devaluate as much as possible so they can become competitive on an export basis as they go along. But Aussie's just been, a failure at every bounce that's possible. And anybody who's gotten Aussie long has definitely gotten hammered as the trading progressed. So that's kind of how everything shapes up right now. And I want to take about 10 minutes, and then I'll take some questions, then I got to go because I'm sorry, I just have a crazy day today. I want to share with you my, I'm trying to find a good, I'm going to do like a 5-minute, 5 days chart. Yeah, I think I'm going to do this on the Aussie first. I'm going to show you sort of like just bear with me. Let me just make sure I get all this correct. I'm going to lay down the indicators and everything. Yeah. Okay. I think I have a good example. Oh, somebody wants to look at CAD. I'm sorry, I don't have time for CAD. I hate CAD anyways. CAD is basically, where's my dollar CAD here? I can't even find my dollar CAD here. CAD is just sort of, failed at 106. And I sort of want to put down this very interesting idea in front of you guys, for you guys to consider. I'll be happy to come back next month and we can discuss it in more detail. But right now, I want to just show you something very interesting. And this involves a couple of key parameters. So I'm going to go through this relatively slow. First and foremost, this is what we call a new session setup. So a new session setup, the conventional wisdom in FX is new FX day starts at 1700 New York time. My charts are on New York time. 1700 New York time is the end of New York session. That's when a new day begins, right? So what we're looking for is the first time during the new day that the OO level, the zero level, is touched, right? Is touched. And then what we're looking for is from which way? Is it touched from above, meaning that the prices are declining into the OO level, or is it touched from below, meaning the prices are rising into the OO level? Because the way, depending on which direction it's coming from, is what we're, is how we're going to trade it. This is a fade setup. It's called the first touch of the OO setup. And what we're going to do is, and this is just an example, of course, trading forex carries a high level of risk. Past performance not indicative of future results. It's all for illustrative purposes only. But I'm going to show you this one example, and then I'll show you a couple of others, and then you guys are free to ask me the questions of how it trades. The whole point is this. I have to have two rules in order to make this setup viable. First, it's a 5-minute chart, right? I'm looking at a 5-minute chart. First, I need to have the first touch of the new session. The new session starts at 1700. So here I have the first touch of the new session, right, at the 8900 level. That satisfies my number one condition. My number two condition is, and this is a very critical condition, I will not trigger this setup. I will not be a buyer. And this is a fade setup. Basically what you're doing is you're saying the first time they try to run it to the OO level, they are not going to have momentum to run it through. I'm going to be a buyer at this level. I'm going to fade this move because they're just running the stop to the OO level, and then it's going to bounce. I'm going to bet on the bounce. This is basically a bet on the bounce, bet on a return to the original direction, right? So the other factor that is absolutely critical to whether I'm going to trade this or not is I need to have the RSI before the price is touched, at least 1 hour, at least 90 minutes beforehand, go below the 30 level, meaning I need the RSI to be oversold. What that means is that I need to have conditions that show an oversold environment, and after that, a break of the OO level. If I have both of those conditions, then I have a reasonable chance that there's going to be a small rebound. I'm going to trade this with a 20-point stop and a 15-point target, right? 15-point target. So if I'm a buyer at 89, 89.15 is my target, 88.80 is my stop. And I hope, of course, there's no guarantee, and of course, there's past performance not indicative of future results, and I hope that I can be accurate 65% of the time. So if I'm accurate 65% of the time, I'm risking 20 points, making 15. 2 out of 3 correct trades. That means I'm hoping to make 30 points on 2 correct trades. I lose 20 points on a losing trade, and net out 10 points on 3 trades. And that is your strategy. I'm sorry. I'm trying to pan. I don't understand what you're saying here, so I don't understand your comments. My risk-reward ratio on this is slightly negative. I am risking 20 points to make 15 points. And the reason why is because I'd like to have a higher probability. I'd like to achieve a higher probability. In a perfect world, I want to achieve a probability of 65% or better. There's, of course, no guarantee that I will achieve that. There's no guarantee this could be successful. But that is what we strive for. And I use basically 2 filters in this setup. Number one, it has to be the first time ever in the new session that is going to touch the OO. And number 2, before it touches the O, it's got to have at least 90 minutes before or earlier a sell through the RSI 30 to show me that prices have really gone into oversold territory. If I have both of those conditions, then I have potential for a trade. In this particular case, I'm buying 8,900. As you can see, I have a bounce to more than 89.15, and this particular trade worked properly. Let me show you. Let me see what I can show you. Trying to see if I can show you my. In this particular case, I don't have any trades because even though, for example, this breaks down through 97s in the Asia session, the RSI does not go below 30, so I really don't have a trade in this particular session. Even though this probably would have worked, so this would have been a good example. I'm just trying to see if I can show you something back here that This is 97, 97. No, it's not breaking. I'm just trying to see if I can give you a dollar yen example here. Okay, I believe here's a good example of dollar yen. Yet another good example. But again, this is a positive example, and there are plenty of negative examples. I'm just basically really just looking through the charts, so I have no idea what's going to come up on the charts. But here's another good example. So here's the 1700-hour cutoff, right? Dollar yen is rising towards the 99 level, right? This is the first 00 level. This is the first time it touches 99 level. Does the RSI on the 5-minute exceed 70 overbought conditions? It does indeed. So therefore, it gives me permission to short 99, right? I short 99 with a 20-point stop and a 15-point target. And it takes me actually a couple of hours here. It sort of trades up, does not take me out of my stop, and then eventually drops down and meets my target. Couple of questions on this particular strategy. Adrian is asking me, what pairs would I trade this on, and does it matter trading time of the day? No, because this is a critical thing. Well, it matters the trading time of the day in the sense that it's got to be the first touch during the whole day being 1700 hours to 1700 hours on New York time, right? So it's not a particular session trade. It's just a particular touch of that particular level. Usually it happens Asia, but sometimes it happens Europe, but sometimes it happens New York. So it's just the first touch of the level. That's the first rule. The second rule is it's got to have an oversold and overbought indication on the RSI on the 5-minute beforehand, at least 90 minutes or earlier, in order for me to feel that all the buying and all the selling has done, and I have a reasonable chance to fade the move. Which currency pairs does this work best on? I think, as always with these kind of setups that I primarily practice, I really focus on the most liquid currency pairs, which in this particular case would be euro dollar, dollar yen, pound dollar, and maybe euro yen, and maybe Aussie dollar on a secondary level. So I think those are the 5 currency pairs that are the most active in the currency market. That's what I would focus on. If you want to nail it down to only 3, then just euro dollar, dollar yen, pound dollar would be the ones that I would focus on in terms of trading this. And you ask a very good point, and this is something that maybe I'll discuss in my future FX Street sessions, which is that this setup will fail many, many times, and you should never use the setup on one single currency pair. I have become a complete convert to portfolio way of trading. In other words, if you have a strategy, in my opinion, the best way to lower volatility and to give yourself as good a chance as possible to try to make this strategy work for you is to try to trade it on several pairs, because inevitably, if you concentrate only on one pair, you're going to get a situation where, for example, you have a continuation. Let's say euro is in a very, very strong uptrend, then every single fade of the 00 level is going to fail, right? But euro could be in an uptrend, and yen could be in a chop range, and pound could be sort of in between. And by having 3 different currency pairs, you hope that the losses of a currency pair that is a runaway pair are offset by the wins of the other pairs, and it certainly gives you at least a better fighting chance, in my opinion. I'm a huge believer in never trading any single strategy on one single currency pair. I'm a huge believer if you're gonna like the strategy, you want to make sure that you can do it at least on 3, maybe ideally 5 currency pairs to diversify your risk. So that's something that I think is worthwhile discussing on our maybe next FX Street webinar next month. But it's part and parcel of this particular strategy. So this particular strategy is designed for euro dollar, dollar yen, pound dollar, and possibly Aussie dollar, euro yen. Ty is asking me, why are my stops larger than my targets? Because you have to understand, you have spread, you have market risk, and generally all of my strategies are intraday day trading strategies with a small negative risk reward ratio, because I'm trying to achieve an accuracy ratio in the high 60s. And it's impossible. Well, it's not impossible. Let me rephrase that. I think it's extraordinarily difficult, and I think it's an illusion that a lot of people believe that you could have let's say a 2-to-1 risk-reward ratio where you risk 10 points to make 20 points and expect to have anything more than a 35% accuracy ratio. For those people who say, well, I'm going to have a 70% accuracy ratio with a 2-to-1 risk-reward ratio where I only risk 10 points to make 20 points and I'm going to be 70% accurate, I think you're setting yourself up for a world of hurt. There may be strategies that are that good. I'm not that smart, and I don't know anybody else who's that smart. Because if you could actually create a 70% accuracy strategy with a positive 2-to-1 risk-reward ratio, that simply gives you a license to print money. And the markets are just not that easy. Markets are extraordinarily hard, extraordinarily difficult. You face a tremendous amount of barriers in trading, and you have to make adjustments into real-life markets. That's why I trade with a negative risk-reward ratio. So does that make sense to you, Ty? Okay. All right. Final set of questions, guys. I'm sorry I got to cut this a little bit short today, but I am just getting pulled in all directions. Those of you, by the way, in the States, I'm gonna guest host Squawk tomorrow morning for the full 3 hours. So I'll see you guys on TV. If you guys want to watch me, hopefully it should be a lot of fun. Somebody says to me, do I use a pending order? Great question, right? So, what I just showed you is a germ of an idea. What I showed you is basically like a sketch, right? In order to really make this a viable trading strategy, in my opinion, it has to be coded. And of course, my next step is going to be to talk to my coder, because this is not something that you could just do. You could sit on the screen and watch this all day long and press the button at the right time and try to hit it. But I think it's extraordinarily difficult to do that. So to me, I think this strategy would work best in an MT4 format. So that would be my best advice to you. But of course, if you want to try it on just a simple point-and-click basis, you can certainly do it on a point-and-click basis. And yes, you could you could definitely use a pending order on a point-and-click basis. Remember, though, the critical thing is you got to have the RSI show you that you're overbought or oversold. Otherwise, you don't really want to pull the trigger, because it could be a situation where you're just going to get barreled over. It's not that you won't get barreled over in this case either, but at least hopefully you have a better filter. You have one more filter that hopefully filters out the more dangerous trades, for the strategy. So I hope you guys liked it. I hope you find this interesting. This is actually an amalgam of a lot of different people's ideas. It kind of started out completely different from where it ended. But I kind of really think this is a pretty cool idea. And this is certainly a setup that shows up, basically when you look at the charts, it shows up every other day at minimum in various currency pairs. So if you have 3 or 4 currency pairs, you certainly have, 3 to 5 trading opportunities every 2 or 3 days. I am not at FXCM. I am at BK Forex, our own company. So if you guys are interested, please come to bkforex.com and come visit us. We have advisory services. We have signal services on that website, and we welcome you guys to sign up. All right, guys. Any more questions? No? Then I thank you very much for all your help and all your interest. I hope you guys like it. Next month we'll get a little bit more detail in terms of. Somebody's asked me, what is my risk for every setup, right? So here's what I would tell you. How would I trade this like in real life, right? So I would trade this particular strategy. Let's say if I had a $10,000 account, I would not trade this more than 10-to-1 leverage. So I would trade 100,000 notional per trade for this particular strategy, which means I would risk $200 per trade on this particular strategy. And I cannot PDF this. No, I'm not. This is not written down, and I'm not about to write this down. It's a little too early for us to write all this down. Our website, by the way, let me just send this to everybody so you guys can come visit us. And also, I'm gonna do 2 things. Here's what you guys need to do. Here's bkforex.com. This is our website, and here is my Twitter handle. You must follow me if you want to know everything that's going on, if you want to get access to like anything, any of our latest strategies, whatever I'm thinking, follow me. Follow me. If anybody is not following me on Twitter, sign up right now and follow me because it's the best way to reach me. It's also, if you have a question, you have something you want to talk to me about, just tweet at me. I will respond. So FXFlow, follow me right now. Do not wait. And then you will be for sure accessing to all of my market commentary and everything else that I do during the day. It's the best way to get a hold of me. All right. So thanks again, guys. Wish you guys the best of luck. I will see you in the markets. Let's hope they're kind to all of us. Have a great day, and everybody enjoy themselves. Talk to you later.